must apologize up front. I'm starting to lose my voice a little bit from all the meetings I've had today, so I'll try and get through this without going into an absolute coughing fit. I suppose just from a Lotus perspective, what I'd like to really try and achieve today with this presentation is just to talk about three distinct things about the company and about the activities that have occurred during the last couple of weeks or so. So first of all, anyone who's been following Lotus will know that we've just recently closed out the acquisition of the ACAP company. So ACAP is another ASX-listed company that had the Letlhakane uranium project located in Botswana. So I'll be talking a little bit about that deal and what attracted us to Letlhakane in the beginning. I'll also be talking about our Kayelekera project as well, which is our primary project, which is located in Malawi. I'll talk about the work that we've done on that since the acquisition in March of 2020, as well as the plans going forward in terms of where we are with that project development. And now I'll really round the presentation off with talking about how Lotus sees those two companies or those two projects working together to be able to generate shareholder value as we move forward. Just starting off my first presentation, or first slide of my presentation there is a picture of the Kayelekera mine. So that's our mine or asset that is located in Malawi. It's a past producing asset, operated between 2009 and 2014, and produced about 11 million pounds of uranium during that period. Previously owned by Paladin Energy, and we acquired the asset of Paladin Energy in March of 2020. Just a little bit about the company at the moment. So market capitalization, assuming a share price or a share price of around 26.5 cents as it was yesterday, our market capitalization is around 450 million Australian dollars, which is just under 300 million US dollars at this stage. We have zero debt. We have no debt at this stage. We have about $16 million worth of cash available to us as well. And you can see there in terms of the pie chart on the left-hand side, the breakdown of our shareholders at this point in time. Strong presence from our management team, own about 12% of the register at the moment. ETFs are starting to buy in. We're seeing a number of institutions come onto the register as well. But still our major shareholders are retail, specifically Australian, but also some global retail coming into the project as well. Just in terms of what the company is about, so obviously Lotus with two uranium assets is very much a uranium production focused company. We have these two assets. We believe we're a leading player in Southern Africa with regard to uranium production. We have one of the largest uranium resources on the ASX. We have 241 million pounds of resource contained between those two projects. We believe that we have a long life and a diversified asset base moving forward, having these two projects in place, with the Kayelekera being our primary project that we can see coming online within the next year or two, and then Letlhakane really being our pipeline in terms of our development project, that having a much longer life of mine associated with it, such that you could end up with Lotus being a company that can produce or provide uranium into the uranium market for the next 20 to 25 years. I think as everybody is aware in this room, very, very strong market fundamentals at the moment. The $74, $75 price that we're seeing at the moment is certainly the strongest since 2011, and our expectations is that price can only increase going forward. We have a very strong proven management team that's got experience of not only operating in Africa, but also developing projects in Africa as well. So I'll just talk a little bit about the two specific projects. I'll start off with Kayelekera, which is our primary project. As I mentioned, Kayelekera is located in Malawi. Malawi is in southern Africa. It is located next to Zambia and Mozambique and just south of Tanzania. So Kayelekera has got an existing plant on site and all the existing infrastructure associated with it. As I mentioned at the beginning of the presentation, it's a past producing asset. It produced 11 million pounds of uranium up until 2014. And it was shut down in 2014 due to economic reasons. So Paladin at that point in time was selling the majority of their uranium production from Kayelekera and also from their second asset, Langer Heinrich, into the spot market. We all know what happened to the spot market after Fukushima. Spot prices crashed. The project is no longer economic. They shut it down and put it into care and maintenance, with, I believe, the expectation, as everyone else had at that time, that within a relatively short period of time, the uranium market would recover and they'd be able to start the project back up again. Unfortunately, that recovery has taken a lot longer than most people expected, and they ended up keeping it in care and maintenance until we acquired it off them in March of 2020. And we've maintained it in care and maintenance since then. But what we've done is we've gone back and we've had a look at all the operating data. We've had a look at how we would develop that project or how we would operate that project. And we undertook a number of programs of optimization work, some really simple things like connecting the plant to the national grid so we can get reduced power costs, having a look at how we can better utilize acid within the plant. Acid is used in two parts of the plant. It's used to leach, but it's also used to strip the uranium off the resin. We can recycle that acid now from the eluate and put it back into the leach circuit and reduce our acid consumption. We've had a look at beneficiation. We've had a look at upgrading that material prior to feeding it into the mill. And using ore sorting technology, we've been able to increase the average grade being fed into the mill by 33%. So taking 600 ppm material from the pit and putting 800 ppm material into the mill has had a significant impact on that project. We've also done some other work around tailings dams in terms of optimizing that. And all of that work we completed over about an 18-month period, and we announced the results of all that work in our feasibility study that was released to the market in August of 2022. Since then, since that August 2022 period, we've really been focused on some of the more corporate and external things associated with the project development, specifically things like mine development agreements, which are very common in Africa, negotiations with Eskom, which is the Malawian electricity utility, around the connection to the national grid, speaking to various utilities about offtake, and also having a discussion around updating that feasibility study by undertaking a more detailed front-end engineering design and detailed design program prior to the construction. So Kayelekera is ready to go. We are just waiting for our mine development agreement to come in place before we can make final investment decision and then execute that project. Letlhakane is the second project which I mentioned at the beginning of the presentation. The deal actually closed yesterday, so really hot off the press at the moment. The Letlhakane project is a very significant project from a resource size, 190 million pounds of resource, but at a relatively low grade, around 320 ppm. Although we recognize that the Letlhakane deposit sits in a very, very similar geological domain to what Kayelekera does. So we believe a lot of the test work that we've done around beneficiation, around upgrading at Kayelekera, will be applicable to Letlhakane. And our intentions are to then bring that knowledge to Letlhakane to have a look at how we can increase that grade. Letlhakane does have a mining license in place, and in fact the previous owners, ACAP Energy, undertook a feasibility study in 2014-2015 which they announced to the market. That feasibility study considered a two-stage heap leach process, but with a relatively low-grade feed associated with it. As I said, we have a different concept about how we want to develop the project, and we'll be focusing on that as we move forward. The one other thing that we really like about Letlhakane, apart from the size of the resource and the potential to upgrade that through more drilling and also through optimization of the resource model, is the infrastructure related to the project. If anyone knows Botswana at all, there's two main towns in Botswana. Gaborone is the capital. Francistown is the second largest city in Botswana. The A2 highway connects those two cities together. Our project sits right on that highway, right on that sealed highway. There's also a rail line that follows that road, and there's actually a siding that sits within the mining boundary. There's a very large substation that sits within the mining boundary, and also the previous owners were able to obtain rights to abstract water and rights to install boreholes on site as well. So from an access perspective, from a water perspective, and from a power perspective, the Letlhakane project sits in a fantastic place for us to be able to develop that project. I don't want to spend too much time on this, but it is a couple of numbers that came out of the latest World Nuclear Association's report there. We just try to summarize some of the key things coming out of that. So I think the most important thing is regarding nuclear power generation. So the WNA is forecasting that on average between now and 2040, there'll be a compounded average growth rate in terms of nuclear power generation of around 3.6%. Today we have 366 gigawatts of electricity equivalent. By 2040, they're expecting that to grow to 686. What I think is really important from a uranium producer is how much uranium is actually required to be able to feed into these reactors going forward. And you can see that in the bottom bar chart over there. The reactor requirements at the moment sit around 170 million pounds of uranium. As of 2022, the amount of primary production, so that's coming out of mines, is about 130 million pounds. So there's a gap there of almost 40 million pounds, which comes out of secondary supply at this stage. However, as we forecast going forward, that gap gets bigger and bigger. In 2030, we're talking about 218 versus only 135. And what's really quite scary is looking forward to 2040, 335 million pounds of uranium is required to feed those reactors, yet the existing mines today will only be producing 65 million pounds of uranium. There is a significant number of new projects that are required to come online in order to be able to meet that gap. And that's where we believe Lotus will be able to participate in. So this is just a little bit about how we see Kayelekera and Letlhakane fitting together. The graph on the bottom right-hand side there shows in the blue bars the Kayelekera production profile. So Kayelekera has a life of mine of around 10 years. The first 7 years been very, very strong, producing somewhere between 2.4 and 2.5 million pounds per annum. As we sort of get to the end of the life of Kayelekera, as we start to move away from mining material from the pits to taking material from the stockpiles, the grades obviously drop off and our production drops off. But that's where we see the opportunity for Letlhakane to come in. Letlhakane, as I mentioned, is a much bigger project. We believe it can slot in at least in those last couple of years of the production of Kayelekera, or potentially even earlier. And we believe Letlhakane can be a future 20-year life of mine, producing somewhere between 2.5 and maybe as high as 4 or 4.5 million pounds of uranium. By putting these two projects together, you end up with Lotus being a company that can deliver between 2.5 and 4 million pounds of uranium into the market for the next 20 to 25 years. And that's what excites us about things moving forward. Just want to show a little bit of peer comparisons in terms of where we sit compared to our peers. And I'm just really looking at the Australian Stock Exchange at the moment, which is obviously where we listed. So with a combination of Kayelekera with the Letlhakane deposit, 51 million pounds coming from Kayelekera, 190 million pounds coming from Letlhakane, but Lotus only owns 85% of Kayelekera, the governments of Malawi owning the other 15%. We have a total attributable resource of 234 million pounds. That is the third largest resource on the ASX at the moment. Only Paladin and Deep Yellow have larger resources than us at this stage. Now that's interesting in itself, but I think what is really important is to note what this means from a valuation perspective. So what we've done on this graph over here, we've split our peers into two different groups. We look at the companies that are restarting mines. The examples there are Boss Energy with the Honeymoon project in South Australia. You've got Paladin Energy with the Langer Heinrich mine in Namibia. And you've got Peninsula as well with their Lance project here in Wyoming. The average weighted dollars per pound in the ground for those three companies is sort of around $8 per pound. If you look at another group of companies, how do you group the new developers? So these are greenfield projects that need to raise significant amounts of capital to bring their projects online. Examples there are Aura, Deep Yellow, and Bannerman. The average there is around $2.4, $2.5 per pound in the ground. Lotus today, post the acquisition of ACAP, and that 190 million pounds of resources coming into our resource base is only valued at $1.90 today. Prior to the acquisition of ACAP, our valuation was sort of in line with the rest of the restarts, around $5 per pound. I think there's a real opportunity over the next couple of months to see a significant increase in our share price as people recognize the value that Letlhakane and this resource can bring to the company moving forward. I just want to quickly talk about some of the economics around Kayelekera. When you look at what we got out of our feasibility study, which, as I mentioned, was announced to the market August of last year, we've got a cash cost of around $30 per pound, all-in sustaining cost of $38 per pound. And assuming today's spot price of $74 per pound, we've got a profit margin there of something like $36 per pound moving forward. Based on our production profile, that equates to an EBITDA of around $90 million going forward. So significant value can be generated from this. Payback periods, less than 1 year. We need relatively small amounts of capital to restart Kayelekera because all the existing plant and all the existing infrastructure is already in place. We just need to refurbish that plant and do a couple of things around the periphery, like connecting to the national grid and installing the nanofiltration plant to be able to recover the acid. Next steps for Kayelekera. So really much more focus, as I mentioned earlier on, around things like mine development agreements, getting the power purchase agreements in place with Eskom so we can access power, confirming off-takes with utilities there. We have been in discussions with a number of companies around, with a number of utilities around that. We are making some good progress on there, and we're hopeful that we'll be able to sign something early next year. We've also starting to talk about our feed program. The feasibility study is a little bit old, August 2022. I think it's really important we go back and refresh that CapEx number, go back, refresh that operating number, go back and have a look at that 15-month time period that we've been talking about for the refurbishment of the asset, just to really check that box before we make final investment decision and move forward with the redevelopment of Kayelekera. From a Letlhakane perspective, we've got a lot of work we need to do on Letlhakane, we believe. And where we want to focus our initial amounts of work is around the resource. As I mentioned, we have this very large resource there of 190 million pounds, relatively low grade, 320 ppm. But we know if we increase the cutoff grade on that resource, we can take the average grade up to about 450 ppm with a resource size of about 120 million pounds. My geologists are telling me they can do better around that in terms of tightening up the wireframing, looking at different modeling techniques about how we can minimize the smoothing of these high-grade pods through the various parts of the project. So there's a lot of work being done around there. We've got an infill drill program that we're planning on doing, because the majority of that Letlhakane resource, the majority of the 190 million pounds sits in the inferred status. We need to get that up to measured and indicated so we can wrap some economics around it. We want to have a look at all the work that we did at Kayelekera around beneficiation. How can we use that to improve the Letlhakane material? Does ore sorting work? Can we look at beneficiation, whether that be gravity or density or size or something like that, to try and get that grade up? We really want to be in a position where Letlhakane is going to be a duplicate of the Kayelekera plant. So it's going to be crushing, it's going to be milling, it's going to be tank leaching, it's going to be resin and pulp, and it's going to be an elution circuit. There's a lot of synergies between those two projects, we think, moving forward. And we'll try and wrap all of that up in a preliminary economic assessment or a scoping study next year so we can show to the shareholders, show to the investors how we see Letlhakane being developed as we move forward.